Hi, this is Steve O'Hare from Signal Centre, and today I'm going to run through a overview of the technical analysis approach we use at Signal Centre to come up with our intraday trade ideas, not just intraday but also medium, short and longer term trade ideas, but give you an idea of how we approach the markets. We all have our own individual styles at Signal Centre, but the overall approach seems to work, as you can see in the results that we've posted over the last few years. Now, initially, what we look at is the longer term time frame, which is obviously very important when you're analyzing markets overall, and we break that down into shorter term time frames to come up with relevant trade ideas on a daily basis. Now, these trade ideas don't get triggered every day, but what we try and do is make them relevant to the market and factor in the possibility of market moves depending on how volatile markets are, or what the expectations are in the background on the fundamental side. So I'll first of all show you these. I concentrate and focus on the commodities, and we swap asset classes to sort of keep us in tune with what's going on in other assets, but predominantly I specialize in the commodity markets for Signal Centre. Now, on the monthly chart, I'll very much focus on my basic chart construction, which is candlesticks. I like to use candlesticks both from a charting point of view and a pattern point of view, and obviously the time frames breaking down from the monthly right down to a 4-hour chart, and even smaller time frames to get decent entry levels. Now, what I like to do is to have at least 2 or 3 indicators, whether it be a candlestick, a chart formation, an oscillator, to confirm the trade idea that I'm looking to produce. So we can see a triangle formation. We can see the move in the oil markets over the 2008-9 period, and the correction back higher. We would have obviously used Fibonacci retracement levels on these longer term time frames, and this gives us a real overview and can be very useful when you're looking at shorter term time frames to back up your overall view. Now, also with these types of longer term charts, we can basically draw trend lines, support lines, resistance lines, horizontal trend lines obviously are very key, as well as the trending support lines and resistance lines. So let's go to the weekly chart, and we can see we're more focused on what's happened over the last couple of years rather than going back 10-12 years, and we can see this corrective channel formation. This was what we did highlight, although it's not on the chart now, way back in 2016 to 18, we were highlighting this reverse head and shoulders formation, which is quite a complex formation, and eventually played out with a break above the $52 level in oil. And this sort of formation assists us as well on the shorter term time frames when you're looking at these levels and you break it down to more of an intraday level. You can see the key breaks during the day that can sometimes lead to sort of quite aggressive and quick moves. But obviously when you're focused on the longer term charts, you're really looking for the overriding trend. Now, when we break it down to a daily chart, again, it's the same sort of thing. We can look for the shorter term support resistance lines, and again this goes back, we look back maybe up to a year or 2 years when we're looking at these types of charts to give the picture. We like to understand what's going on the fundamental side of things, so we look at the news headlines and we have an overview and really have a vision of what's going on in the world, to then overlay that into a timing tool, which I believe technical analysis is a fantastic timing tool to enter and exit trades. and whereas the fundamentals are the main drivers of the market, obviously. So with the daily charts, I like to also introduce oscillators, the MACD in this case. That can also give a good indication of when we're getting bearish or bullish, positive or negative divergence. The Fibonacci retracements lines are obviously very important to me, and also I look at Fibonacci projections. But the main thing I tend to go for, and my favorite trades would be reversal patterns. Being quite a contrarian analyst, contrarian trader, I think technical analysis is an ultimate tool in highlighting reversal patterns. The main ones I look for are head and shoulder patterns, especially the complex ones, which tend to be more successful than others. Also, triple tops, triple bottoms, double tops, double bottoms. They're the real, what I believe are the real key formations that once we have confirmation from other sources, can be very, very successful in a trading plan. When I go down to anything below a 4-hour chart, I also like to introduce the Ichimoku cloud. This is one of my favorite indicators also. It does give a project forward resistance and support. Is a very easy to use graphical tool, and gives you, you can apply any chart with an Ichimoku cloud chart, and it will give you an instantly evaluates what sort of trend you're in, whether it's bearish, bullish, over whichever time frame you decide to select. There's a number of trading strategies built into the Ichimoku cloud, and these obviously also give you, as well as good target areas, decent stop loss areas. So the whole once you combine candlestick patterns, Ichimoku cloud, oscillators, trend lines, horizontal resistance lines, horizontal support lines, then apply a good money management strategy, then that's what we try and focus on at Signal Center to produce reliable and relative trade ideas on a daily basis. One of the main indicators as well that I focus on is the average true range, and that gives us a good idea of the expectation of the daily range, and that goes a long way into letting us apply a good risk reward trade strategy. Risk reward is very important, obviously, to us. We more often than not are at least two to one. That's probably the minimum we go to, but we also look at trades which are 3 to 1 or 4 to 1, depending on how confident we are in that trading strategy on an intraday basis. I hope this has given you a good overview of how I approach the markets using technical analysis, and thank you for your consideration.